This is general advice, my opinions, and for entertainment purposes only. CFDs are high risk, past performance isn't reliable, I may be long or short CFDs and stocks mentioned. Content may contain language that offends some viewers. Righto, punters, mate, welcome. Oh, geez, bloody, better put that fucking logo down. Don't get any cash off them anymore. Buddy, right, long or short, with the rise in copper, zinc, and just every stock in general, my first bloody employer, old Billy, Develop Global. So this has just been on an absolute tear of recent. I unfortunately fucking sold it at $4.01. Now it's bloody $5.50 or something. So good one, Matt. But it's but I haven't actually done a full yarn on it yet about Woodlawn, Sulphur Springs. Mate, Pioneer Dome's back in the mix with lithium going off its head. The mining services. So let's rip in. So you see the prezzo they did. God, last year, $1 billion enterprise value, $1.6 billion now with the new share price rise. One of the few Aussie copper exposures, copper, zinc, bit of silver too, so one producing mine, one mine in development, the mining services division, like the contracting, and Big Billy himself, the main man from Northern Star Glory. So there's the charts. Have a look at the run it's been on. Oh, dull, dumbass Matt sold down here. And, mate, she's up to, to close at 529 yesterday, nearly cracked 550. All-time highs, it appears. So that's the 5-year chart from when it had the bill re-rate. On the right-hand side here, and then it's that was around, $3 to $4, and then it's sort of been tracking sideways for a while, but it's just started bloody taking off, which has got me interested. And on the back of, as you can see here, the copper and zinc prices, these are in dollars per tonne, but you can see copper's now US $6 to a pound, gone from, since April last year, it was down at, $9,000 a tonne up to 13,000. And same as zinc. Zinc's bloody not stinking anymore. So this is what it's on the back of, and just the love for equities at the moment. So Woodlawn, they're targeting, so this is in New South Wales, the one they picked up off Heron out of admin after that went to shit in COVID. So they're targeting a 15-year mine life, currently 10-year mine life. They've put a lot of development in already, which I believe will de-bottleneck the development from the stoping. Oh, by the way, I don't hold a position. I do not hold a position in this stock. So full disclosure, yet, in any direction. So targeting, it's a 850,000 tonne per annum mill for 22,000 tonne copper equivalent. And they're looking at scenarios for 1.35 million tonne. So and the payable average annual streams in the con are 12,000 tonne of copper and 36,000 tonne of zinc. And there's also lead, silver, gold in that as well. But these are the main ones. So that is technically, I know there's different parts of the ore body. There's the polymetallic ones and the copper ones. But on average, that is, if you go by just the spot prices, not going like payable annual streams. So that's 58% copper and 42% zinc. So you can say that Woodlawn is a copper mine based on the current spot prices and the bush maths. So I'll show you the reserve they've got. You can see here 6 million tonne at 2.9% copper equivalent, but obviously plenty of growth opportunities within there. As you can see, they're drilling the living piss out of it. So, but that's what they've got at the moment. The metallurgy, been questions about that. There's a bit of, I don't know if it's scuttlebutt going around, but the info you got, I guess, is the recoveries are trending towards the 2024 study numbers, which were 84% copper went in copper only, 64% for copper went in the polymetallic, 85% for zinc, 90% for silver, 50% for gold. So you can see by the October metal recoveries, copper was nearly up at 81, lead I haven't got lead on there, but zinc 80.8 needs to be 85. So they are trending in the right direction. But the big fella's there. Nathan Stoitis, he's been appointed as GM of Processing and Met. Bill's ripped him out of his consulting world and put him into Develop. So Stoitis was on the board of Rocks that I mentioned the other day. He's also the head of Processing and Met for Develop. So that's, if you're talking about personnel that you want to ensure to get recoveries all good, he's the bloody, they've got the people in there. Sulphur Springs, up north, up near Port Hedland. So this is the asset that came in with Venturex when Bill backdoored himself in there. So that is looking at average recovered metal for years 3 to 7, so 1 to 2 year ramp up, years 3 to 7, and of 11,500 tonne of copper and 79,000 tonne of zinc annually. So that's just on spot prices, 38% copper, 62% zinc. So that is more a zinc mine. Sulphur Springs is more zinc than copper. A bit bigger, 1.5 million tonne per annum. Pre-production capital, which includes building a mill, 329 million, and looking for first metal in FY28 and full ramp up by FY30. So still a while away. They're punching declines at the moment, but things are happening. But it's a growth story, that one, and I guess the size of it, looking at the mining, so it says on the edges, the stopes are sort of 2 metres wide, but then the ore body goes to about 50 metres wide in the centre. So you'd think it'd be easy enough to get 1.5 million tonne per annum if developed ahead of time properly, because you got bulk mining opportunities. You see the blue and the red, they're the primary, secondary stoping sequence. That's transverse. So it'll be all backfill and then mine in between the backfill. And they're talking about bottom up. So it's a lot more bulk mining than you would see in a narrow vein gold mining. It's more, this is what you see in your base metals. It's bigger tonnes, and hopefully easier to get the tonnes out. It's not always that bloody simple. You can have shit ground and ground that de-stresses once you try mine in between stopes and above stopes, and but don't have any information on that yet. But it's more of a bulk mining opportunity. And don't forget good old Pioneer Dome. Pioneer Dome's back in the mix. The lithium deal that got pretty much valued at nothing once lithium shit itself. Now with lithium, bloody spodumene 6%. Back in the 2,200 a tonne US, this could actually be worth something. 11 million tonne at 1.2% lith, down near, I guess you'd say, Esperance, I think. Is it Esperance? Nah, Norsmany area. So, logically, it'd have to... Norseman. So you got MinRes's Bald Hill and Mount Marion up here. So that's bloody, potential for that to head that way. And as we said, lithium's going off its head, but I'll be interested to see when there's the supply response from MinRes, turning Bald Hill back on and things like that. So we're going to be waiting on that. But that is now back in the mix with rise in commodity prices. So they're looking to, I think that had about 200,000 tonne of spodcon at 5.5% annually with a 7-year mine life. And it's an underground narrow vein lithium mine effectively. Now, the mining services. The Bellevue contract is in place until 31 July 2026. So they've extended that for 7 months. They're going out to tender. I forget the value of it. I think it was 130 million or something, that 7-month tender. So they extended it, and Bellevue are going out for tender in this half, right? They'll be, I assume now or very soon, they'll be running the tendering process for the contract beyond that. I know that Argonaut said in their note that they assume that Develop will get the contract again. But I am not sure. I don't think it's a foregone conclusion. I think Bellevue's a tough mine. do Bellevue want develop there? Do develop want to be there? Will they get cheaper rates with a Barminco or something like that, which is better for Bellevue because they pay less? It is up in the air. So that's going to be, I guess, a bit of a catalyst, but I'll go through later. Like in terms of what it makes up of the share price, the mining services division isn't a big part of it. So I don't think it's not something that the business wants to be dependent on. But they also got $200 million contract with Oceana Gold at Waihi North. So that's like a 5-year, like big friggin' like decline development under a friggin' mountain. So it's friggin' huge. So yeah, they've got that. So they're not pressed on just being in WA. Like they're definitely developing. You know, they've got Woodlawn in New South Wales. They've got contracts in New Zealand now. Like they're spreading themselves far and wide, which means when I talk about potential M&A, I don't think it could be fucking anywhere. So like the FY25 contract revenue from the mining services division was 200 mil, because I think that within that FY they had the Mount Marion exploration drive, they had Beta Hunt decline, obviously Bellevue, but you think 200 mil revenue, like contracting such small margins, I'm not sure. It's hard to figure out what their margins are because it's all mixed in with all their other costs. Like, God, work on 5 to 10%. I think if you're getting 10% underground, you're going pretty well of actual fucking profit on 200 mil revenue. So the belt, like, then this is the other thing about Bellevue. Like, you remember March last year, so nearly a year ago, 10 months ago, Develop had to put out an announcement saying, like, affirming that the relationship between Develop and Bellevue is very strong in all areas and payments were up to date. Like, when these sort of announcements come out, when there's smoke, there's fire. Like, of course the fucking relationship might have been shit. Like, it just wouldn't have... You wouldn't, like, the rumours going around media or just general around the market, like, there's always some substance to it. So, and obviously they've had incidents there. Like, yeah, so it's not a foregone conclusion that Develop's going to keep that contract. I don't know. But it might be an opportunity to put his gear elsewhere. So we'll wait and see this quarter. So it has big implications on Bellevue, I believe. Not as much on Develop. Like, mining services makes up 85 cents of the share price of Argonaut's NAV. So definitely not the big lever of the business. The big lever is the mines, Woodlawn and Sulphur Springs, and potentially good old Pioneer Dome, but it's not huge. So Develop, are they copper or are they zinc? So we look at... These are the from the Argonaut model. There's not heaps of models out for them. I think Canaccord have got one, but Argonaut was the most updated one. So you can see the copper they're producing. So FY26 expected to produce 8,500 tonne. That's from Woodlawn, and 25,000 tonne of zinc. So there's a bit of silver, 590,000 ounces, ramping up to, by FY27, they'll be producing 10,000 tonnes of copper from Woodlawn and 38,000 tonnes of zinc. But then the step change comes when Sulphur Springs starts coming online in FY28. So you can see that doesn't ramp up till FY30. So that's 14,000 tonne of copper, 73,000 tonne of zinc. So a lot more metal coming out of Sulphur Springs than Woodlawn. And then you've got 10,000 tonne of copper and 30,000 tonne of zinc coming from Woodlawn in FY30. So FY30 is like the big time for them. So bloody have a look at the silver, 712 plus 690, so about bloody 1.4 million ounces of silver. That's production. I don't know if that's recovered and payable. This says mine production. So, mate, it's amazing when silver price goes up, you realise how many people produce silver. So, yeah, so you can see FY30 is the big year. And you got bloody zinc's 4 times the price, copper's 4 times the price of zinc. So Woodlawn's a copper mine and Sulphur Springs is more of a zinc mine. So comparison to other ASX miners, when you comp them, this is interesting. So I've gone by production volume of just copper for FY28. Develop sitting down even near FY30. So Develop's down the bottom. Like AIC Mines is producing more copper, so's Aeris, so's 29 Metals. Even out to FY30 when they're in full ramp up, Aeris and 29 Metals predicted to produce more copper than Develop. And same on production volume of zinc. So 29 Metals produces more in FY28. Develop takes over both Samphire and 29 Metals in FY30. And silver, how good's silver? So, yeah, not bad. Bit more than Aeris and AIC. Not as much as 29 Metals. But gold, that's just sort of, coming from Woodlawn. It's only 50% sort of recovered. So, but that's volume sold. So not much coming out of Develop, 5,000 ounces in FY28. But then you look on a free cash flow basis and an EV basis. This is where I think it gets interesting. So you can see that Develop's obviously got a bit better grade. So Develop is forecast to make more free cash flow than both 29 Metals, Aeris and AIC. So 197 mil in FY28, obviously ramping up further in FY30. So they outperform there. But you look on an EV basis, Develop's EV is now, this is off Visible Alpha, it's at 1.8 billion. And compared to, so it's double 29 Metals' EV, like 4 times the EV of AIC. But it's definitely not magnitudes of their production. So you can just see like the valuation of it compared to those peers is pretty hefty. And it could be just based on execution and predicted free cash flow in those later years, I believe. So that's where the stock gets interesting compared to its peers. Better put the old phone on bloody silent. The money. How much dosh have they got? So raised 180 mil in June 2025, all with Argonaut, which pissed a few bankers off on other banks, no doubt, at $4.50. One of them bloody surprise ones. It's like, nah, fucking no dilution, won't raise, bloody, nah. We're going to be selling a project stake of Woodlawn to fund Sulphur Springs, and then they just come out with a raise. So that's all you do. You never believe what these bloody companies tell you. So they're anyway, that funded them. So that gave them current cash of 203 mil. They've got a fully drawn Trafigura prepayment facility for Aussie 107.5 million. So, and then they've also got bloody 50 mil of equipment finance drawn. So that's like Sandvik, Commonwealth Bank, Epiroc, Cat Finance and NAB. So I think there's another, it's a 108 mil facility and 50 mil is drawn. So it'd just be interesting to see, like, as I said, current cash, 200 mil. So they're only just sort of net cash at the moment. But yeah, it'd be interesting to see these next 2 quarters while work's going into Sulphur Springs and if Woodlawn's start going to bring in some bloody revenue with the bloody concentrate sales and maybe a bit from mining services, just to see if they can start bloody nudging that up a bit. So, because the joys of having debt, this is customary to all these debt, the financial covenants with Trafigura for the offtake prepayment facility. So plenty of wiggle room right now with 200 mil in cash, but it's just always something to watch. When they've got debt with anyone, it's like the security, the covenants, and I'll paraphrase what it says, any breach by Develop may require Develop to raise additional capital. So sometimes if they're looking pretty, that's like worst case scenario. Some shit would have to really go wrong there, but that's always something to think about with debt. Now, the cash flows. This is from the Argonaut model. Now, remember, Argonaut raised the money for Develop, so you just got to take models with a grain of salt because they're always looking good to keep good mates with them. That's just how it works. But you can only go, we only fuck with the dick you've got. So they're saying net debt, also net cash, 219 mil, FY26. By end of FY27, that's when the capital is going to be sunk into Sulphur Springs. So net cash will be 126 million. So you can see that's going to be, I guess, the growth year. FY27 funding the development of Sulphur Springs, and then cash flows should start ramping up to bloody by FY30. But you look at the commodity prices used in these models, copper price long dated at FY30 was $5.13 US a pound. It's now $6 a pound, and zinc price was $1.50 or $1.40, $1.45, and it's $1.44 at the moment. So that hasn't. So copper's definitely. So you'll see a lot of upside in those Woodlawn cash flows, and obviously Sulphur Springs with the big lift in copper price. So potential deals, are they? This is what I guess what got me thinking about developers. Fuck, when their share price has done this, it's all like, when the script's value good, it's always done a raise or fucking something. And I fucking know they've been looking for a deal. I'm sure they're working their bloody ass off trying to find a deal, but now all the value of everything's gone up and they haven't been able to really execute a deal, which I'm sure they've been looking hard for, and you'd hope they won't overpay. I don't think they would overpay for anything. You're wondering if they're going to stick to this growth pipeline just with Woodlawn, Sulphur Springs and a few services contracts. No, they're trying to get project equity in mines to accompany the mining services. But yeah, I wonder if it's too late to get a deal done with the prices at, or, high valued scrip can purchase other high value scrip and you end up in sort of the same place. I've always thought AIC Mines, it's like a quarter of Develop's market cap and produces more copper. And Bill was previously the general manager of Eloise when it was back in his Barminco days. I think it was owned by FMR, owned by Piggy Bartlett. So that was always one that always thought might be a chance. Medallion, this is the one I'm thinking that they'd push for. It's a good place for their underground mining gear. I do hold a position in Medallion. Did a ep on it the other day. So I do hold a bit in Medallion. It's got a tiny bit of copper. It's fuck all, like 3,000 tonne a year or something. But then you've got Alkane on the register as a strategic. Can you imagine a Develop merger with Alkane to give them access to the undergrounds at Tomingley and Costerfield down in Vic? And Alkane's never been like a shoot the lights out sort of company. It's just sort of ticked along. It's not a bloody fucking Genesis or Capricorn valuation. So that's out there. But I think Medallion I think that might be a possibility. I know that Stella, the tin in Tasmania, tin's a bloody precious metal. He's after precious metals. But Medallion's gold. But I don't think it's got the tiniest bit of copper. But I wouldn't be surprised if he goes back into gold. Stella, that's a development project in Tasmania. Surely they've looked at Metals X as well at something, but that's probably Gornsky's. Cannington, that'd be fucking huge. Lead, silver, zinc mine, South 32, North Queensland. I think it produces 10 million ounces of silver a year. I'd say by now, I know they were trying to sell it, but now the silver price ripping, it would be worth way too much with the massive rise in silver. So I can't see that bloody coming to the forefront. But I heard word on the decline. They were up there last year fucking looking at it. That is what I heard. Could interlope on Havilah. That's a big project. The copper in South Australia. But that looks close to done with Samphire. Shareholder vote on 16th of Feb. So I don't think that's a thing. Surely not Core Lithium. Underground up into the Northern Territory. But lithium's fucking ripped. Maybe not. Tell you, God, you had to be quick on fucking counter-cyclical with lithium. It would have hurt it. I'd say buying lithium counter-cyclically friggin' 2 or 3 months ago would have just hurt people too much on the market's perceptions, but you'd look like a fucking genius now. So that's why long, why short. It's interesting. It's interesting. I think the long side, there's a growth story. Like the fruit comes in FY30 when Sulphur Springs is ramped up with what they've got. Like Pioneer Dome might be worth something again, like fucking lithium spodumene's going off its fucking head. To think we're back in the 2000s heading towards $3,000 a tonne US for spod, that is a potential bloody easy bolt-on for what they've got already. They've got plenty of resource mine plan growth at Woodlawn and Sulphur Springs. You're seen by the images, like there's fucking... Sulphur Springs has got heaps of growth by the looks, only drilled down to 500 metres, I think. Woodlawn appears, and Woodlawn and near mine stuff as well. Plenty of opportunity there. Mate, silver kicker, if silver continues to go mad, bloody 1 and a bit million ounces of silver, you wouldn't sneeze at it. Might be bloody, 30, 40 million bucks extra in the bank each year. But there's would they be able to execute a transformational deal that would re-rate the stock? And I think they've been trying very hard to do that. On the other side, when you comp them, are they overpriced compared to AIC, Aeris and 29? I know 29 Metals is pretty much 5x of recent times. Aeris has performed bloody great. But they're still on an EV basis, significantly lower than Develop because of the bill factor. Because they're no doubt on hunt for a deal. Like, can they avoid overpaying in this price environment? I think they've got the discipline to do that. I don't believe they would. It'd be interesting to see how the market perceives, because you've got negative free cash flow FY27 while building Sulphur Springs. That's predicted based on old commodity prices. If fucking copper keeps going and zinc keeps going, they might be able to be cash flow neutral. Who knows? They might make more money out of it. But it's a pretty big swing I think they'll definitely be cash flow negative, free cash negative. So it's how the market will look at the growth story whilst producing at Woodlawn. So as long as that narrative is correct, it should be all right. Market reaction if they lose the Bellevue contract. I think it's, as I said, it's not a big, I just don't think it's a big deal. Like, they can either pick up another contract or deploy that gear to their own mines, save them buying more gear. I wouldn't think it'd be it's not the fucking be all and end all. Like, when Sulphur Springs starts ramping up, and no doubt bloody Woodlawn and fucking if Pioneer Dome come online, that's places to put your jumbos, trucks and boggers. So because if you keep the contract, you got to buy more gear, you got to take more debt, and you got to, so I'm still in two minds about that. So overall, I don't know. Just looking at the chart, I don't know what I'm going to do. I'm just going to leave it for a bit, I think. It's on a run. It's got the brand behind it, like the world-class mining services bloody thing. Like, it's marketing 101. Like, they've got some great miners that work for them, but so do Barminco, so do Northern Star, so do Burncut. There's great miners spread across the whole industry. There's blended, and they leave one and go to the other. They've all got their batches of really good miners. Some are better than others at different mines. Like, it's just is what it is. Like, you can't. Let me give you an example. So you wouldn't be able to. It'd be hard pressed to believe either like a Burncut or Develop could go into somewhere like Sunrise Dam or Agnew and start performing as good as Barminco do after being there for fucking over a decade or more. Like, you can't have Barminco come into Jundee and take over Burncut and perform better than Burncut, because they've just got that much entrenched knowledge there. And that's just, and there's just good operators everywhere. So I think, it's good marketing. World-class mining services division. I love it. So there we go. That's the long and the short of it. So we will see what happens. Good for fucking go spodumene. Maybe it's all gone up because of the spodumene price. Who would have thought? Righto, punters. Stay safe out there. Fucking love your work.